Good morning, trading world. It is February 7th, 2022, just after 7:30 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the SPY. The title for today's outlook, just like the show Malcolm in the Middle, we have the market in the middle. Sometime back I did a pre-market talking about standard deviation, the bell curve, and how much I use it in determining percentages in the outlooks each day. Well, to tie it in, the further from the mean we trade gives us a better probability of where we go the next day or week or month based on the time frame. It's almost like the measurement I use to measure the rubber band stretch before it snaps back. Last week, we closed right in the middle, which gives us no statistical advantage in handicapping the market. This close in the middle further supports something I've said for a couple weeks now, that we are going to trade sideways until the end of February, or to the beginning of March, before our next big drop. We are still in a volatile state, which could throw some nice sized ranges at us. However, don't expect the VIX to scream danger again until we threaten below the 430, 420 area. If we break above 450, expect some fast pops up to the overhead supply area, which is between 454 and 460 area, which will also be a great place to short. Another thing to pay attention to is that we are approaching an overbought condition on the daily time frame again. This week, we could see wild swings back and forth, ending the week not far from where we started. With that, let's get to the key levels to watch for the day. Alright, here we go with the key levels of the day, starting with the resistance decision areas. Jack resistance is going to be the 449 through 450 area. Queen resistance is going to be 451 through 452. And King resistance is going to be 454 through 460 area. On the support side, we have Jack support at 445 through 444. Queen support, we have 443 through 441 area, and King support, we have the 440 down to the 435 area. The main thesis for today is bearish, but not by much, closing below 448.7. Alternate thesis is bullish, closing above 448.7. The current minor channel we are in is 453, 453 through 443, with the major channel being 453 all the way down to 425. Another thing I want to reiterate is that if we close any closes above this 450 area, it opens up these quick, fast pops up to the overhead supply area, which is in this 454 to 460 area. We could pop pretty quick up there and kind of chop sideways, and then look at some point, whether the same day or later this week, drops out of the area just as fast all the way back down to below that 450 area. All right, let's take a look at some of the scenarios for today. All right, here we have the first scenario of the day, which should be a range day, or I should have written in expansive range day, because we should push the boundaries higher and higher at some point today. So on the range day scenario, we have probably a test of our jack resistance and probably some trade sideways, since there's a lot of order flow in this area. So we should get some sideways movement at that 449, 450 area, and then maybe a drop back down, probably close to this 448, somewhere in there, before trying to push through that 449, 450 area again. And like I said, once we close above that 450 area, we should see some fast pops up, and we would be headed toward the oversupply area of this 454, 460, or just below it. And somewhere in there, we're going to probably chop sideways before coming back down at some point today, or more than likely into the closing today. We should fade off of that area. If we're up there anytime an hour or somewhere around closing, we should fade off of that. So that is the first scenario. Again, like I said, we closed at pretty much the middle, which doesn't give us much of a statistical edge when day mapping or mapping things out. So you'll notice all the probabilities are pretty much the same. Given this is just maybe a percentage more than either of the other scenarios, but it's pretty close to even here today. So let's move on to the next scenario. All right, the second scenario is going to be our rounded reversal day type, or as I like to call it, the tranche day. We could get a continued takeoff toward the queen or king resistance area, so this will be something to pay attention to before the opening if we continue moving up, and especially if we get this pop up above this 450 before closing. That just gives us more of an incentive to pop up and keep going to this oversupply area up here. And once we get there, if it's going to be the rounded reversal day type, I expect we get there by midday, and we would spend pretty much the middle of the day going sideways up here in this area, eating up order flow. And again, as always, the thing to look for is that divergence. From the opening here, the divergence will be especially in volume, because we'll see a pop in volume on the first couple of bars, but then from that point on, volume should diverge away from price action. If price action is going up, volume should be going down. And when we reach the midday chop area, you want to pay attention to your indicators or internals, whatever you watch. You should see the divergence there as well. As we move sideways, you should see a definite trend down, which kind of clues you in that we're going to take that fall the second half of the day. So that is our rounded reversal. And the key thing on the rounded reversal is that we should come out the gates like a rocket, going up, headed towards our midday chop area. And that midday chop is so key to watch the divergence that may take place there to kind of key you into the second half of the day. So that is the second scenario. Let's move on to the last. And here we go with the last scenario, which is a trend day up day type. And what we usually look for on the trend day up is that we have to open up with a gap. So if it's going to be a trend day up, we look for a gap to the upside. And we usually get a try or a half-hearted effort to fill the gap. So represented by the blue line here is the previous close from yesterday, the 448.7. And so we would look for the gap up and try to come back and fill the gap, but somewhere either on or before the previous close we should find support, and that will get us into the main trend of the morning, which would be up, and we should have a sharp trend up all the way to our midday chop area, which is going to be somewhere between the queen and king resistance area. And we get that midday chop area chopping sideways, and then to start the second half of the day we'll probably get a head fake looking to continue the trend of the morning, but at some point late in the day we'll begin to fade back from the highs of the day and pretty much fade off into the closing. So that's the trend day up that we're going to look for. Again, since we closed in the middle and the way this week is shaping up, I pretty much see us going all over the place and ending up nowhere. So we could see some great ranges up or down, but we're pretty much going to end back up in the same place this week. Another thing, especially starting off to the upside, I may just decide to sit on my hands until we reach above the queen resistance, or definitely get to that king resistance area, because not just for this week, I'm going to start planning positions and putting on positions for March or for the beginning of next month, and these are definitely going to be short positions. So that's something that I'm looking at doing. As I like to tell you all the time, especially in these volatile times, please know your risk. Your number one tool when trading is the capital, the money in your account. So we have to protect that at all costs. So know your risk, define your risk, and then everything else like profits will fall in place. But you can't continue to trade if you lose all your money on 1 or 2, 3 trades. So know and plan your risk accordingly. As always, wishing you a successful trading day. Have a great one.